Hello, inderesTV viewers and listeners. Today we're having a Caverion CMD interview with Caverion's CEO, Jacob Götzsche. Welcome, Jacob.
Thank you.
Caverion updated its strategy on Monday, and today, on Tuesday, we had Caverion's Capital Markets Day. And firstly, we could summarize, Jacob, the key points of the updated strategy and what are you going to do going forward?
Yes, we're coming from a strategy period where we have been focusing on getting fit for growth that we launched in 2017 and also put some target in 2019. We now believe that we are in a place where we also want to achieve sustainable growth through differentiation. So our new strategy is focusing on sustainable growth.
What is this kind of sustainable growth and what does it kind of mean to you? What can you explain to investors? What does it include?
For us as a company and for me as a CEO, sustainable means that we had some growth in the past that was not sustainable. And now we want to build the company in a recurring, sustainable growth, stone by stone, ensure what we are building and the growth we take is also sustainable, farming our customers, ensure we get more with the same customers, but also with the new customers that we have this balance between risk and reward.
Okay, and what kind of growth opportunities are you seeing in this kind of sustainable growth area that you're looking for? What are the kind of the main areas that you're focusing on?
Our luxury is that the market is so huge, and we are still small compared to the market. So what we are going to prioritize on is where are we strong, where can we utilize the capabilities and competences we already have. And we also show today that we have some excellent centers. It can be with EV charging, it can be with clean room, where we then take it from different divisions and put it cross-border, but also utilizing it in cross-border contracts. We saw today with PostNord in 3 countries, and we have more of these contracts where the customer wants to take us across borders.
You also kind of highlighted that you are trying to move up the value chain in your strategy and in your business areas. Can you briefly explain what does this kind of mean in your business?
Yeah, we have grouped it in 4, you can say, boxes. And if we start from the bottom, we have our base services, our disciplines, its installation, etc. Then we have our smart tech, where we go a little bit more into the stomach of the building with the building automation. Then we have our managed services that we also saw today with Kesko, where we are managing a lot, and also with the PostNord. And then we go up the advisory, engineering, and design. The good news is that we basically have all the services in our company today, but there's areas where we have white spots, where we need to add a little bit more of the competences and capabilities. And then some areas where the demand from our customers is also saying, can you add this to our portfolio? Then you will also stay more relevant in the future. So the overriding theme is ensure we stay relevant for our customers also in the future and be able to add more solutions and services to them.
Okay. Then let's move on to the kind of financial target part of the strategy. You kind of divided your growth ambitions to 2 kind of parts. First one is the organic side, which is the kind of 3 to 4% growth per year to the end of the strategy period. And then you have the non-organic, which was 2 to 3% growth there. So can you first kind of talk about the organic side? You said that the market is growing around 3% per year, but you seek to grow in line with the market. Where do you kind of see the organic growth opportunities in the market, and will you be able to grow even faster, do you think?
The reason why we have set a target of 3 to 4% is simply that there has now been 2 years with the corona pandemic. there's unfortunately a war in Ukraine that we don't know where it takes us. So there's a lot of uncertainty. And secondly, we will continue our strategy within the projects to be selective and deliberately choose the projects we want to have. So what we have seen, and we also saw it in Q1, we had 4.4% growth in our service, but negative 1.4% in our project. And of course, that's dragging the total percentage down.
All right. How about the kind of non-organic part, the M&A part? That's, I think, in my eyes, it seems that that's gonna be more in part of your strategy going forward in the growth, because previously that wasn't kind of part as a numerical target. Can you highlight kind of some of the areas where you're looking those M&A opportunities there?
Yeah. As I also said earlier today, there's two areas. There's if we have a white spot in a division where we need some capabilities and we have the customers, so we know if we acquire these capabilities and competences, then we will accelerate our growth on the back of that. And then there is new competences or capabilities. It can be in the higher end where we will be able to attract other customers and also get in higher in the value chain and then fuel all this the disciplines down in our value chain with the base discipline, smart tech, etc. So you can say it's a combination of ensuring that we have the right platform in the right geographical area, and then it's adding competences and capabilities to serve the customer.
Yeah. And on the financial targets, more you said in the presentation that cash is king, and you have been able to produce kind of nice cash conversion rates, and the cash conversion rate kind of target remains on the same level. But the other kind of important for you has been profitability, and the profitability target remained unchanged at the over 5.5 EBITDA margin target. You haven't been able to reach that in this past years, and now I'm going to ask you what is kind of different this time, and what are you going to do differently to achieve that target?
Yeah, it's a good question. It's just also to remind ourselves that we have been through, like the entire world, 2 years of heavy changes due to Corona, and that of course have had an impact. And now we have the Ukraine thing. We just have to admit that we have maybe been too bold earlier. And before we increase our target, then we believe we need to create the trust and deliver what we say. So therefore, it's the reason why we have kept the 5.5. We believe it's realistic, and we also showed a bridge of how we want to go there. We believe that we have the actions to get there, so we can also demonstrate to you and the market that we are able to fulfill our strategic targets.
Do you kind of see that Caverion is now kind of in the fit phase to continue growing and maybe increasing the volumes, and that's way to increase also the profitability going forward?
Yes, that's one of the ways. We have the systems, we have the processes, and we have the procedures. So of course, by growing, we need to ensure that we also leverage our scale. And therefore, there is also something we can gain from that. Having said that, of course, it needs tight cost control, because otherwise it sneaks in. But I'm a strong believer in looking at the waste in our processes and say, how can we in a lean way ensure that we get more arms and legs out to the customer, and how can we support the business in a better way so we utilize our scale and leverage.
Okay, thank you for the interview, Jacob. Very nice interview.
Thank you very much.